In a significant development in U.S.-China relations, U.S. Treasury Secretary Scott Bessent announced that a framework deal has been reached regarding the ownership of TikTok, a popular social media platform owned by Chinese company ByteDance. The agreement, discussed during trade talks in Madrid, aims to transition TikTok to U.S. ownership with commercial terms reportedly settled. This deal marks a critical juncture in the ongoing trade negotiations between the two nations, which have been strained since the U.S. imposed tariffs on Chinese goods in April. The agreement is set to be potentially finalized in a conversation between U.S. President Donald Trump and Chinese Premier Xi Jinping. The TikTok ownership issue has been a contentious point, particularly under the Trump administration, which has pushed for ByteDance to divest its stake in TikTok due to national security concerns. These concerns stem from Chinese laws that could compel ByteDance to share user data with the Chinese government, coupled with the proprietary algorithm that determines user content. The resolution of this issue could ease some tensions in U.S.-China trade relations, potentially paving the way for further economic cooperation. However, analysts caution that potential trade hurdles could delay the finalization of the deal, with a fifth round of negotiations anticipated in the coming weeks.
Tesla's board has proposed a new compensation package for CEO Elon Musk, potentially worth up to $1 trillion in stock options, contingent on meeting certain milestones. This proposal, which dwarfs previous compensation packages, is being positioned by Chairwoman Robin Denholm as crucial for Tesla's future. Denholm argues that Musk's leadership is indispensable for achieving Tesla's ambitious goals in AI and autonomous technologies. Despite Tesla's declining vehicle sales and earnings over recent years, the board maintains that Musk's leadership is vital for navigating the company's transformative period. The announcement has sparked debate among shareholders and industry observers, particularly given the backdrop of Tesla's recent financial performance and Musk's significant existing stake in the company. Critics argue that the proposed compensation package is excessive, especially when compared to industry norms, and question its necessity given Musk's existing incentives as Tesla's largest shareholder. The upcoming shareholder vote on November 6 will determine the package's fate, potentially setting a precedent for executive compensation in the tech and automotive industries. The decision could also impact Tesla's stock price and market perception, as stakeholders weigh the balance between rewarding leadership and ensuring equitable shareholder value.
The financial landscape is currently dominated by debates surrounding the future trajectory of the U.S. dollar, a critical issue given its status as the world's reserve currency. With 58% of global foreign exchange reserves held in dollars and 80% of global trade finance conducted in the currency, the dollar's strength or weakness has far-reaching implications. This extends to stock market directions, bond market volatility, and global trade shifts. The discussion is polarized between those predicting a continued rise in the dollar's value, as supported by the dollar index DXY, and those anticipating a decline. This debate is not merely academic. It impacts everything from central bank policies to the price of precious metals like gold, which has been gaining status as a reserve asset. Prominent figures like Brent Johnson and Henrik Zeeberg argue for a potential spike in the dollar's value, driven by the immense demand for USD liquidity, especially in times of financial crises. Historical precedents, such as the 2008 financial crisis, saw the DXY surge 20% due to heightened demand for dollars to cover euro-dollar debt and as a safe haven for global investors. This scenario could repeat in future crises, potentially as soon as 2026, when a significant correction in overvalued markets like the S&P 500 might occur. The argument hinges on the dollar's ability to attract capital due to its perceived safety, even as it faces criticism for its long-term viability. In this context, the dollar is viewed as the best horse in the glue factory, indicating its relative strength despite inherent vulnerabilities.
In a recent development, former President Donald Trump proposed shifting from quarterly to semi-annual earnings reports for public companies, citing potential cost savings and improved management focus. This proposal, shared via Truth Social, suggests that less frequent reporting could align U.S. practices more closely with those in the UK and European Union, where semi-annual reporting is standard. Trump argues that the current quarterly system fosters a short-term focus detrimental to long-term strategic planning. This perspective echoes a 2018 op-ed by Warren Buffett and Jamie Dimon, who criticized the emphasis on short-term profits driven by quarterly guidance, although they did not advocate for eliminating quarterly reports entirely. The Securities and Exchange Commission, SEC, which currently mandates quarterly earnings reports, would need to approve any change. With a Republican majority at the SEC, the proposal could gain traction, although the process might take 6 to 12 months. Critics of the proposal, including Art Hogan of B. Riley Wealth Management, argue that quarterly reports provide essential transparency and timely information for investors, helping to maintain the U.S. reputation for reliable financial reporting. Despite Trump's comments on Chinese practices, companies in China also adhere to quarterly reporting requirements. The debate centers on balancing the benefits of frequent reporting with the potential advantages of allowing companies to focus on long-term growth strategies.
Sandisk Corporation, NASDAQ, SNDK, a recent spin-off from Western Digital Corporation's WDC SSD business, has seen a remarkable stock price increase of 139% since its market debut in mid-February. This surge has been driven by optimistic narratives around NAND demand and the potential growth of AI infrastructure. However, analysts from Tech Stock Pros caution that the stock is entering high-risk territory, with the Relative Strength Index RSI at 91, indicating it is in oversold territory. Despite the excitement surrounding Sandisk's BICS8 SSDs and host bus adapter (HBF) products, the integration into AI markets is expected to be gradual, and current demand from smartphones and PCs remains weak. The evaluation suggests that the AI-driven demand for NAND storage may be overestimated, posing near-term risks for investors. As a result, Tech Stock Pros has initiated a sell recommendation for SNDK at its current levels. This analysis reflects broader concerns about the sustainability of the rapid stock price appreciation, especially given the current market conditions and the potential for volatility in tech stocks. Investors are advised to exercise caution and consider the potential risks associated with the stock's high valuation and the uncertain demand outlook in key technology sectors.
McDonald's has announced a $200 million investment over the next 7 years to promote regenerative agriculture practices on U.S. cattle ranches, marking the company's largest commitment to sustainable agriculture in the United States. This initiative aims to improve soil health, conserve water, and reduce reliance on synthetic chemicals by implementing techniques such as rotational grazing, which allows land to recover, enhances grass growth, and increases carbon sequestration. The effort will cover up to 4 million acres across 38 states, with the first round of competitive grant awards expected in January. These grants will be managed in partnership with the National Fish and Wildlife Foundation, supporting organizations that assist ranchers in adopting these practices. The investment aligns McDonald's with other major corporations like General Mills, Nestle, Walmart, and PepsiCo, which have also committed to regenerative farming projects. Key suppliers such as Cargill, Golden State Foods, and Coca-Cola are contributing additional funds to support the initiative. By promoting sustainable practices, McDonald's seeks to enhance the environmental sustainability and long-term productivity and profitability of ranching operations, while also reinforcing its commitment to sustainability in response to growing consumer and regulatory pressures. This move reflects a broader industry trend towards environmentally responsible practices and could positively influence market sentiment and consumer perceptions.
Two Roads Development has secured a substantial $520 million construction financing package for the Pendry, Tampa, and Pendry Residences Tower, currently under construction in downtown Tampa. The financing is provided by Sculptor Real Estate, a New York-based investment firm, and Nuveen Green Capital from Connecticut. While Sculptor is solely providing financing, Nuveen's contribution is through the Commercial Property Assessed Clean Energy (CPACE) program, which enables property owners to finance upfront costs for energy-efficient and resilient projects via a voluntary property tax assessment. This financing is crucial for the project's development, emphasizing sustainability and resilience, with features such as floodgates, elevated parking, and hurricane-rated windows. The 38-story luxury hotel and condominium complex, part of Montage International's Pendry brand, is slated to open in 2027 It will feature 220 hotel rooms, extensive meeting spaces, and high-end amenities, including a spa and dining options. Above the hotel, 207 condos will offer exclusive residential services and access to hotel facilities, with prices starting at $1.7 million, with construction progressing and over 60% of the units sold, valued at over $300 million. This project is set to significantly impact Tampa's luxury real estate market, attracting affluent buyers and enhancing the city's profile as a destination for high-end living.
The chief executive of the Ghana Cocoa Board, COCOBOD, Dr. Ransford Abbey, has engaged in strategic discussions with prominent Japanese chocolate manufacturers, including Glico and Itochu, to bolster cocoa trade relations. This initiative, part of Dr. Abbey's agenda at the Expo in Japan, aims to secure and enhance the steady supply of Ghanaian cocoa beans to Japan, which currently constitutes nearly 70% of the country's cocoa imports. Dr. Abbey highlighted COCOBOD's efforts to tackle challenges such as the cocoa swollen shoot virus disease, CSSVD, and the adverse effects of illegal mining on cocoa farms, inviting Japanese companies to support rehabilitation programs designed to boost cocoa yields and ensure a sustainable supply. The discussions underscore the critical importance of Ghanaian cocoa in the Japanese chocolate production value chain, with Japanese executives expressing their commitment to supporting COCOBOD's initiatives. These engagements are crucial as they not only strengthen bilateral trade relations, but also have the potential to stabilize and enhance the global cocoa supply chain, benefiting both Ghanaian cocoa farmers and Japanese manufacturers. The partnership could lead to enhanced agricultural practices and increased productivity, ensuring the long-term sustainability of cocoa production in Ghana.
Core financial event, ***, the City of North Platte's budget planning meeting and its impact on property taxes. Key entities ***, City of North Platte Public Schools Board and Nebraska State Government. Context and impact. ***, the City of North Platte has proposed a budget that increases its tax request by 2.49% to $41.6 million. However, due to rising property valuations, the city plans to reduce the mill levy by 1.23%, marking the third consecutive year of mill levy reductions. This strategy aims to manage the tax burden on property owners while accommodating increased budgetary needs. The city also benefits from a local option sales tax, contributing 28% to the budget, which has grown due to successful retail recruitment. On a broader scale, Nebraska's state government is helping reduce property taxes by assuming the operating expenses of community colleges, saving nearly $300 million annually. Additionally, the North Platte Public Schools Board has opted not to increase its property tax request authority, prioritizing spending aligned with inflation and student growth. These measures collectively aim to balance fiscal responsibility with the need for public services, impacting local taxpayers and setting a precedent for other subdivisions.
Atlas Brown Inc. and Next Level Private LLC have both increased their investments in the Walt Disney Company, NYSE, DIS, reflecting a broader trend of institutional interest in the entertainment conglomerate. Atlas Brown Inc. recently purchased an additional 132 shares, bringing its total to 20,111 shares, which now account for 0.8% of its portfolio valued at approximately $2.49 million. Meanwhile, Next Level Private LLC acquired a new stake of 1,887 shares, valued at approximately $234,000 during the second quarter. This investment activity is part of a wider movement, with major entities like Vanguard Group and UBS Asset Management also increasing their holdings. Notably, UBS increased its shares by 21.8% in the fourth quarter, now holding 16,867,017 shares valued at $1.88 billion. Currently, hedge funds and institutional investors own 65.71% of Disney's stock, indicating strong institutional confidence in the company. Disney's recent financial performance has been positive, with the company reporting earnings per share (EPS) of $1.61 for the quarter, surpassing analysts' expectations by 16 cents. The company also achieved a 2.1% year-over-year revenue growth, reaching $23.65 billion. Despite these gains, Disney's stock saw a slight dip of 0.9%, opening at $116.02, which is within its 52-week range of $80.10 to $124.69. Analysts maintain a favorable outlook on Disney, with J.P. Morgan Chase & Company, Rosenblatt Securities, and Morgan Stanley raising their target prices and maintaining overweight and buy ratings. The consensus among analysts is a moderate buy, with a target price of $131.18, reflecting optimistic sentiment toward Disney's strategic positioning in the entertainment industry, supported by its diverse content portfolio and robust revenue streams.